Good morning, everyone. Welcome to today's session of Free Well with William O'Neill India, dated November 2, 2022. Before we go ahead with the presentation, I would like to give a small disclaimer that any security that we might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. Without taking you much time, I'll start with Nifty 50's chart analysis for the day. And those who have been following our mailers and would have better understanding of the concept at the moment. And this is the like some of the alternate rules of William O'Neill that have been coming into play at the moment. And what's happened with yesterday's move is that the previous rally high of around 18096 got retaken last time. So what William O'Neill says that when even without a follow through day, when the previous rally high gets taken out, a buy switch gets turned on. So at the moment, the market is still in rally attempt, but we will look out for stocks with with good ratings. We will look out for stocks that satisfy the criteria, that satisfy the fundamental aspects, that technical aspects, everything. And that's why we've been sending out a buy watch list as well for who are subscribers to our mailers in the evening mail as well as the morning mail. So what happens from now is that if the follow through day doesn't come, we'll look at the 52-week high, and the 52-week high was the 18,351 level. So if Nifty is able to reclaim that 18,350 level, or Sensex is able to reclaim its past 52-week high, then Nifty can be upgraded to a confirmed uptrend. But yes, follow through day remains the primary criteria, and we would like to see a follow through day. But if the 52-week high gets reclaimed, then even after that, it can be changed. Nifty, the status of the market can be changed to do a confirmed uptrend. And why this is happening? Because if you look at from the technical perspective as well, Nifty is taking out its recent resistance as well, and Nifty is trading well above its key moving averages of 200 DMA, 21 DMA, 50 DMA. So at the moment, it's looking very good for Nifty, and there are few macroeconomic events that are lined up. I mean, in terms of non-farm payroll data from US, your FOMC meeting, where probably has 75 bips rate hike is more or less priced in at the moment, and but still the commentary needs to be looked out. There's an RBI meeting. Uh, there's an RBI meeting as well during the week, and it's going to be an eventful week. And if Nifty is able to sustain above the 52-week high, then it becomes a really good sign for market to be taken into a confirmed uptrend. So talking about the key news, Hero MotoCo, its October auto sales declined by 17% YOY to 4.55 lakh units. Export declined by 41.8% YOY to 11,757 units. TVS Motors October auto sales increased by 2% YOY to 3.6 lakh units. Exports declined by 13% YOY to 82,816 units. On the results front, JK Tyre's Q2 FY23 revenue from operations grew by 25.8% YOY. PAT was down 22.9%. Chambal Fertilizers Q2 FY23 revenue increased by 91.7% YOY, but EBITDA declined by 39.7% YOY. EBITDA margins contracted by huge 1,130 bips YOY to 5.2%. PAT declined by 45.8%. VSSL, your Q2 FY23 revenue grew by 32% YOY, and PAT was down 15.3% YOY. The major results that needs to be looked At today are Adani Transmission, M&M Finance, Relaxo, Kajaria Ceramics, Dalmia Bharat, GSL, JK Paper, among others. So talking about the global market, in terms of US, again had a down day. It's the second consecutive down day, and Dow is down by around 0.2%, S&P 500 by 0.4%, Nasdaq by 0.9%. Asian markets, on the contrary, were flattish to little positive, as you can see. Nikkei was flat at around was very flat, and Shanghai and Kospi was up by 0.2%. USD INR appreciated minorly from 82.7 to around 82.66. Crude oil continues to go higher. Yesterday was around 93.5, 93.6 to around 95.6. US 10-year Treasury stands at around 4.038%, and the inversion between the 2-year, 5-year still remains. The 2-year is around 4.50. So talking about the SGX Nifty, SGX Nifty is indicating a positive opening, and last it was around somewhere around 18,220 to 230-ish levels, and yesterday's close around 18,141. So is indicating a gap up opening of around 70 to 80 points. So, ACE Action Construction Equipment continues to remain in our buy watch list. And before we go ahead, I mean, would like to give a disclaimer that at the moment it's not a buy or sell recommendation, and we're just doing it for education purpose. And if we talk about ACE, I mean, the Q2 quarter is yet to be reported. However, the Q1 quarter was very good in terms of revenue growth, your EBITDA margin expansion, your EBITDA growth, your cranes business, all the construction equipment segment, all of them grew. So majorly, it's play on the growth story or India's infrastructure growth story. So that is the government of India will be allocating around 1.45 trillion under the National Infrastructure Pipeline from FY 19 to 25. So most major cities are equipped with metro projects, and to support the increasing traffic, there has been a lot of emphasis on the city roads, bridges, and flyover. The company is expected to see robust demand in FY 23 as well. And some key differentiators for the company has an in-house R&D center that works continuously to upgrade the product. The company has a strong team of highly experienced professionals. So the R&D is checked, your employee professional count has been checked, and there's been strong guidance on the margin front, on the growth front as well. The company expects 15 to 20% growth in the cranes and agri segment, 30 to 35% growth in the construction equipment segment. So huge growth headway for the company in terms of your margins of around 20 to 25% in the material handling segment as well. So, sorry, in terms of the growth for the material handling segments, around 20 to 25%. Margins for the company is also expected to improve. And if we look at from the William O'Neill perspective, then as you can all see, EPS strength is a check, buyer demand is a check, your group rank for the company said even the price strength is a check as well. So the stock was forming a consolidation base, so probably maybe because of that, post RS line hitting in high, the RS line kind of flatted out. But there is still around 4% to pivot and 4% to high at the moment. And from now on, if probably the stock can move higher on an above average volumes, a quick move, and can provide a breakout, then probably even the price trend can go above 80, and can the stock can provide a clean breakout or not. But the only problem is like the EPS is due in 8 days. If it can do in a day or two, then that's fine. If the breakout happens very close to the result anticipation, then it's better to stay on the sidelines for the stock till the point in time the stock result is announced, because there is a high amount of uncertainty when any results are to be announced. And if you look at the other parameters like the holdings as well, the institutional holdings have been increasing for the stock. The ROE for the stock is still good at 14%, and the base count is also low. And overall, it probably fits all the criteria at the moment from the one perspective. And probably the only thing that's left is a good and clean breakout at the moment. So probably if we get a good and clean breakout on above average volumes, then the problem, but it has to happen like in a day or two. So overall, that's it for the company, and that's it from our side as well. And please stay tuned to the space of pre-bell as well as your after hour space. Pre-bell at 8:45 a.m. sharp, and your after hours at 4:30 p.m.